and welcome. My name is Brian Caplen, editor of The Banker. I'm here with Danielle Myles, the investment banking editor. We're reviewing the January issue of The Banker, which goes to the annual meeting of the World Economic Forum in Davos. So Danielle, you've been looking at regulation and taking stock of regulation since the crisis. So what have you been discovering?
There's obviously been a lot of talk and concern about a fragmented regulatory playing field globally for many years now. But the fact is there was quite a joined up regulatory response to the crisis. I mean, harmonisation, dialogue and coordination between the major markets is actually quite strong.
All right, and is that starting to change then?
It is changing in terms of non-crisis area reform, so things relating to technology and data ownership. We do see some regions sort of heading their own direction.
Okay, because we've got on the cover story, this is the cover story, we've got this very nice illustration of 3 yachts, one with an EU flag, one with a US flag and one with a Chinese flag. So what is that telling us about what's happening with regulation?
So each of those regions, as the image indicates, are going their own direction when it comes to mainly to do with data ownership. So we have China has taken a very permissive approach, and that's allowed the likes of Ant Financial and Tencent to sort of leverage the large amounts of data they have on users.
All right, and these are non-banks, that's
non-banks,
the point,
exactly, yeah. And they become major players in terms of retail finance.
Whereas other areas have been more restrictive.
Absolutely. So the EU is historically been much more restrictive in terms of data privacy, but they have the second Payment Services Directive coming in at the beginning of 2018, and that requires banks to share customer data in certain situations with non-banks.
Okay, so that's kind of opening up by diktat, if you like. And what's happening in the US? I mean, the US is traditionally much more sort of laissez-faire.
Absolutely, and it's the same in this situation. So the regulators have taken very much a back seat. That said, obviously there's a very well-established culture in terms of innovation and technology in the US. So we have seen some banks open up their APIs and collaborate with some of the fintechs, but they're not going to see the same disruption that we're going to see in Asia and Europe.
Okay, so if we put all this together, I mean, what sort of impact is that different approach to these issues going to have on innovation going ahead?
Thinking about it from in terms of Asia and Europe, we're going to see much more sort of client or customer-centric financial models. So Ant Financial and Tencent are the perfect examples in China. But then in Europe, we might see these sort of Amazons of financial services emerge.
Which become the aggregators, really.
Absolutely, the aggregators for people like you and I. When we do our banking, we go via that to look at all our various accounts rather than going to our bank. The US, on the other side, is not likely to see.
But do you think we should really rule the US out? I mean, it's got such a fantastic track record in technology, hasn't it? With Silicon Valley and Amazon and these big giants.
That's right, and that's where they have stepped up to date. But some people say that they can't pick up regulator slack in every area.
Okay. Danielle, thank you very much. That's the cover story for the Davos issue of the Banker, together with a whole range of Davos coverage on different articles and with viewpoints from a number of high-profile people around the world. So make sure you get your copy at thebanker.com.